Ladies and gentlemen, stop what you're doing. What I'm about to show you isn't speculation. It's not theory. It's happening right now, in real time, and the implications are so massive that most people won't understand what hit them until it's already over. Middle Eastern capital is leaving the West. Not slowly, not cautiously. This is a strategic repositioning happening right now, and the infrastructure being built to support it tells you everything you need to know about what's coming next. Let me show you what I'm seeing. The surface story is simple. Gulf states are diversifying. They're building sovereign wealth funds. They're investing in Asia. They're creating financial centers in Dubai, Abu Dhabi, Riyadh. Standard development narrative, emerging market growth, nothing to see here, but that's not what's actually happening. What's happening is a controlled extraction. Decades of petrodollar recycling through New York and London is being quietly unwound. The money that built Western financial markets, that propped up treasury auctions, that filled the order books of Wall Street banks, is being rerouted. And the timing of this shift is not coincidental. Start with the numbers. Saudi Arabia's holdings of U.S. treasuries have dropped from over $180 billion to barely $110 billion in less than 3 years. The UAE followed the same trajectory. Kuwait, Qatar, Oman, all moving in the same direction. These aren't market timing decisions. This is coordinated deleveraging from dollar-based assets at a scale that suggests something deeper is being prepared. Now, you could argue this is just portfolio rebalancing, diversification, risk management, and on paper, that explanation works. But then you see what they're building with that capital, and the official story starts to crack. The UAE just launched a new clearing system for non-dollar trade settlements. Saudi Arabia opened direct currency swap lines with China that bypass SWIFT entirely. Bahrain is building digital asset infrastructure that connects directly to Asian liquidity pools without touching Western banking rails. These aren't defensive moves. This is offensive financial architecture being constructed in real time. And here's where it gets interesting. The capital isn't just leaving. It's being locked into systems that are designed to be insulated from Western oversight. The new financial centers being built in the Gulf aren't just regional hubs. They're designed as bridge infrastructure between Asia and Africa, completely bypassing the traditional London-New York axis that has controlled global finance for a century. Think about the geometry of what's being created. China's Belt and Road runs through the Middle East. The BRICS expansion includes Saudi Arabia, the UAE, and Egypt. The Shanghai Cooperation Organization is integrating Gulf energy exports directly into Asian consumption without dollar intermediation. And at the center of all of this, Middle Eastern capital is building the payment rails, the commodity exchanges, the settlement systems that make this new architecture functional. This didn't happen by accident. This level of coordination doesn't emerge from independent decision-making. Someone drew the map, someone ran the scenarios, someone decided that the risk of staying inside the Western financial system had become greater than the risk of building an alternative. And you can see exactly when that decision was made. 2022, the freezing of Russian foreign reserves. $300 billion in central bank assets, held in dollars and euros, locked by political decision. Not by law, not by debt default, by executive action. Every finance minister in the world saw that moment and understood the same thing. If it can happen to Russia, it can happen to anyone. The Middle Eastern response was immediate, not public, not announced, but measurable. Capital flows shifted within months. New bilateral agreements started appearing. Infrastructure projects that had been planned through Western contractors suddenly pivoted to Chinese and regional partnerships. The message was clear. The era of assuming Western financial infrastructure was neutral and safe had ended. Now watch what they're doing with energy contracts. Saudi Aramco just signed long-term supply agreements with China that settle in yuan. The UAE is pricing oil sales to Asia in a basket of currencies that includes everything except dollars. Qatar's LNG contracts are being restructured with dual currency options that allow buyers to avoid dollar exposure entirely. This is the foundation of the petrodollar system being dismantled piece by piece, transaction by transaction. And the speed of this shift is accelerating. 5 years ago, maybe 10% of Gulf energy exports were priced in non-dollar currencies. Today, that number is approaching 40% in some markets. The trajectory is clear. Within a decade, dollar dominance in global energy trade could be a memory. And the primary architects of that transition are the same countries that built the petrodollar system in the first place. But here's the part that most people miss. This isn't just about currency, it's about power. It's about who controls the infrastructure that makes global trade possible. For 50 years, that control sat in New York and London. The clearing systems, the payment networks, the reserve currency, all of it ran through Western institutions that could monitor, regulate, and if necessary, freeze any transaction on the planet. That monopoly is breaking, and Middle Eastern capital is funding the alternative. The new systems being built don't just offer diversification, they offer independence. They offer the ability to trade, to clear, to settle, without asking permission from Washington or Brussels. And once that infrastructure is operational, the leverage reverses. Suddenly, the West needs access to these systems more than the systems need access to Western markets. You can already see the early signs of this flip. Western banks are opening offices in Dubai and Abu Dhabi at a pace that suggests desperation, not opportunity. They're hiring Arabic-speaking relationship managers. They're applying for licenses and regulatory frameworks they don't control. They're positioning themselves as service providers to a system they used to dominate. And the terms are different now. Middle Eastern financial centers aren't replicating Western regulations. They're writing their own rules, lighter oversight, more flexibility, faster approvals, and critically, no automatic information sharing with US or European authorities. The new hubs aren't just competitive. They're designed to be opaque to Western surveillance. This is where the geopolitical implications become unavoidable. Capital flight of this scale doesn't just affect markets. It affects alliances. It affects defense relationships. It affects the entire structure of global power that has existed since World War II. The Gulf states aren't neutral players rotating their portfolios. They're actively building the financial infrastructure for a multipolar world. And they're doing it with the accumulated wealth from 5 decades of selling energy to the West. The irony is almost too perfect. The petrodollar system was supposed to lock the Middle East into permanent dependence on Western finance, sell oil in dollars, recycle those dollars through New York banks, buy treasuries, fund the US deficit, repeat forever. It worked for half a century, but the system contained the seeds of its own destruction, because all that accumulated capital eventually became large enough to build an exit. And now the exit is being used. Not loudly, not with declarations of independence or geopolitical manifestos, just quiet, methodical, irreversible capital reallocation, billions moving every month, new institutions coming online every quarter. Each transaction, each new clearing system, each bilateral swap line, another brick removed from the foundation of Western financial dominance. The question isn't whether this shift is happening. The data is too clear. The question is what happens when it reaches critical mass, when enough capital is left, when enough alternative infrastructure is operational, when enough trade is settled outside the dollar system. What does the world look like? Because we're not talking about a marginal adjustment. We're talking about the potential collapse of the entire architecture that has allowed the United States to run trillion-dollar deficits without consequence. The ability to print dollars and exchange them for real goods depends on global demand for those dollars, and that demand was built on the petrodollar system. If that system is being dismantled, the foundation cracks. And the Middle Eastern states know this. They're not naive. They understand exactly what they're doing. This is strategic planning at the highest level. This is decades of careful positioning finally being activated. They watched the Soviet Union collapse, trying to compete with the West. They watched China rise by integrating with the West and then gradually decoupling. They learned from both, and now they're executing their own version. The beauty of their approach is that it's non-confrontational. There's no declaration of war, no sanctions to retaliate against, no military posturing, just capital allocation, just financial infrastructure, just contracts being signed in different currencies. It's almost impossible to respond to because there's nothing overtly hostile about it. Countries are allowed to diversify their reserves. They're allowed to build financial centers. They're allowed to trade in whatever currency their partners agree to. But the cumulative effect is devastating. Because once the alternative infrastructure is built, once the new clearing systems are operational, once energy trade is denominated in yuan and rupees and dirhams, the leverage shifts permanently. The West can't sanction what it doesn't control. It can't freeze assets held in systems it doesn't access. It can't monitor transactions it can't see. And Middle Eastern capital is funding every piece of that alternative system. Not as charity, not as geopolitical activism, as investment. Because they see what's coming. They see a world where the West's financial dominance is no longer guaranteed, where Asia's economic weight translates into financial power, where commodity producers have leverage again, and they're positioning themselves at the center of that transition. The timeline matters here. This isn't a 50-year plan. The infrastructure being built is coming online now. The currency swap lines are operational. The non-dollar clearing systems are processing transactions. The new commodity exchanges are pricing contracts. Within 5 years, maybe less, the alternative financial architecture will be robust enough to handle the majority of non-Western trade without touching a single Western institution. And when that happens, the foundation of Western economic power shifts, not collapses, not overnight, but shifts in a way that can't be reversed. Because once capital is left, once infrastructure is built elsewhere, once trade patterns are established in new systems, the cost of returning is too high. The exit becomes permanent. You can see this understanding in Western policy responses, the sudden push for CBDCs, the attempts to regulate stablecoins, the pressure on crypto, the new sanctions architectures. These aren't random initiatives. their defensive reactions to the realization that the monopoly is breaking, that alternatives exist, that the ability to control global finance through dollar dominance is eroding. But the response is too late and too fragmented because the capital has already moved. The infrastructure is already being built. The contracts are already being signed. The strategic shift isn't theoretical anymore. It's operational. It's measurable. It's irreversible. And the Middle Eastern states are driving it. Not China, not Russia, the Gulf, the same countries that were supposed to be permanent junior partners in the Western financial system. They're not rebelling. They're not making demands. They're just building an alternative. And they're doing it with the money the West paid them for oil over the last 50 years. The trap has already been sprung. The capital flight isn't a future risk. It's a present reality. The strategic repositioning isn't a warning sign. It's a completed action. By the time this shows up in mainstream financial headlines, the transition will be too far advanced to stop. And here's the final piece that makes this unstoppable. The Middle Eastern states aren't doing this alone. They're coordinating with China, with India, with Russia, with the entire non-Western world that has been waiting for an alternative to dollar hegemony. The capital flight from the Gulf is the funding mechanism, the infrastructure they're building is the platform, and the combined economic weight of Asia and the commodity producers is the demand. This is the geometry of a new financial system being assembled in real time. And it's being built with Western money, by Western-educated financial engineers, using the playbook the West wrote. The irony is complete. The system that was designed to lock the world into dollar dependence created the wealth that's now funding its replacement. If this continues, and there's no indication it won't, the global financial order will look completely different in 10 years, not because of war, not because of sanctions, not because of political revolution, because of capital allocation. Because money at this scale doesn't just follow returns, it builds reality. And Middle Eastern capital is building a reality where the West is no longer the center, where dollar dominance is a choice, not a necessity, where financial infrastructure exists independent of Western control. By the time the full implications of this become clear, it will already be too late to reverse. The capital has left, the infrastructure is rising, the strategic shift is complete, and no one is talking about it